What if I told you that 90% of traders lose money not because they can't predict the markets, but because they can't predict themselves? Close your eyes for a second. Imagine checking your trading account and seeing zero. Your life savings, gone. Your dreams, shattered. Your family looking at you asking, what happened? This was Mark Douglas in 1982, bankrupt, broken, standing in his empty house, Porsche repossessed, career destroyed. But what happened next revolutionized trading psychology forever. Within the next 10 minutes, you'll master the mental framework that separates the 10% who consistently profit from the 90% who consistently donate their money to the markets. Mark Douglas didn't just write The Disciplined Trader, he lived it. And today we're unlocking its deepest secrets. Trading looks so simple that it creates a psychological trap that catches almost everyone. Here's the mind-bending paradox. Trading appears to be the easiest way to make money, yet it's actually one of the hardest endeavors you could ever undertake. This illusion is so powerful, it's destroyed more fortunes than any market crash. Douglas stood in the luxurious Merrill Lynch office at the Chicago Board of Trade. 38 account executives surround him, sharp, confident. He asks a simple question. How many of your clients are making money? Silence. Not one client. Not a single profitable trader among hundreds of accounts. The typical client? Wiped out within 4 months. Then, he goes down to the legendary trading pits. Surely here, among the warriors of capitalism, he'd find the winners. What he discovers shocks him. He watched a trader make $3,000 in the first hour. By lunch, he'd given it all back plus another $2,000. And this happened every single day. The same trader, the same pattern, the same result. Like a gambler who can't leave the casino, except the casino is in his mind. Here's the truth. The markets are not your enemy. Your untrained mind is. The very psychological tools that make you successful in business, relationships, and life become weapons of self-destruction in the markets. Persistence in a losing trade leads to bankruptcy. Blind optimism closes accounts. Being right is irrelevant if you're broke. Overconfidence builds catastrophic losses. The market doesn't do anything to you. You do everything to yourself. Every trader goes through the same psychological journey. Most just never make it past stage 2. Douglas identified 5 distinct stages, and you can't skip them. You can only move through them faster by understanding what's really happening in your mind.
Stage 1. The innocent. You see others making money. It looks easy. You think, how hard can it be? Buy low, sell high. Your confidence comes from ignorance, not knowledge. Like the client who made $200 on Apple stock in 10 minutes and quit their job thinking they'd make $156,000 a year, only to be living in their car 3 months later?
Stage 2. The awakening. Reality hits like a sledgehammer. Losses pile up. The market seems personally attacking you. Your brilliant analysis fails. You realize with horror, you don't know what you don't know. This is when conspiracy theories start. It's the market makers. It's the algorithms. Anything but the truth. You simply don't know how to trade. Most traders quit here. Stage 3. The seeker. You become a trading education junkie. New system every week. Indicators multiplying like rabbits on your charts. You're searching for the holy grail outside, when the answer is inside. Douglas met a trader with 47 monitors, his desk looking like NASA mission control, all for consistent losses. Why? Because he was looking for certainty in a game of probabilities. This stage can last years, even decades. Stage 4. The breakthrough. This is the shocking realization. The problem isn't your system, it's you. Your psychology is sabotaging every good setup. You could have the perfect system and still lose because fear makes you hesitate, greed makes you overtrade, and ego makes you revenge trade. The real work begins. This realization breaks most traders, but for the few who push through, Stage 5. The master. You trade without fear because you've accepted the market's uncertainty. Losses don't sting because ego isn't involved. Profits don't intoxicate because they're expected outcomes of probability. You've become what Douglas calls available, ready to flow with whatever the market presents. The master trader is like water, taking the shape of whatever container the market provides.
No forcing, no fighting, just flowing. Which stage are you in right now? Be honest. Your childhood beliefs about money are sabotaging your trades right now, and you don't even know it. Every trader carries invisible psychological software, programs installed in childhood about money, success, and self-worth. These programs run automatically, making decisions milliseconds before your conscious mind even realizes what's happening. Douglas encountered James, a successful man with $8 million whose hands shook every time his trading profits hit $500. He'd hear his father's voice. "Who do you think you are? You're nothing special." James would click out every single time, driven by a deep-seated belief that he didn't deserve wealth. Douglas discovered traders have an internal financial thermostat. Just like room temperature, they'll unconsciously adjust their behavior to maintain their comfort level. Make too much? Give it back. Lose too much? Trade brilliantly until you're back in normal. What's your financial thermostat set to? That account balance where you start feeling uncomfortable. That narrow band in between is your prison. You could have a PhD in technical analysis, memorize every candlestick pattern, master every indicator, and still lose consistently if your inner thermostat is set to broke.
Fear in trading doesn't protect you. It creates exactly what you're trying to avoid. Fear doesn't just cloud judgment. It literally creates the losses you're desperately trying to prevent. Watch this mental movie. I guarantee you've starred in it. A trader enters a position. Price moves against him 1 tick, 2 ticks. Fear whispers, "You're wrong." 3 ticks. Fear shouts, "Get out!" But he freezes. The pain builds. He starts bargaining with the market. "Just come back to break even. I swear I'll get out." 10 ticks. 15. The loss is now bigger than 5 trades worth of profits. Finally, at maximum pain, he exits. Destroyed. Demoralized. The market immediately reverses, goes profitable, without him. Here's the twist. The fear wasn't protecting him from losses. The fear was the cause of the losses. When you perceive a threat in the market, your amygdala hijacks your prefrontal cortex. You literally lose the ability to think rationally. Your IQ drops 20 to 30 points. You become a caveman with a trading account. Think about your last losing trade. Where did you feel the fear? Chest? Stomach? Throat? That physical sensation, that's your early warning system. When you feel it next time, you'll know. Fear is driving, not analysis. Professional traders discovered something amateurs can't accept. Being right is irrelevant. The market isn't about being right. It's about probabilities. This shift in thinking literally rewires your brain's response to uncertainty. Douglas watched a professional trader take 20 losses in a row. 20. Any normal person would be destroyed. This trader, calm as a meditation master. "How?" Douglas asked. The trader smiled. "I'm not trading to be right. I'm trading to execute probabilities. Each loss just means I'm closer to the wins. It's just math." He was like a casino. Some customers win, most lose, but the house always wins in the end. The amateur needs to be right. The professional needs only to execute. Mind-blowing truth. You can be wrong 65% of the time and still be wildly profitable. You can be right 80% of the time and go bankrupt. It's not about the win rate. It's about the expectancy equation. Let me break this down with real numbers. Trader A, 80% win rate. Wins, $100 average. Losses, $500 average. 100 trades. 80 wins times $100 equals $8,000. 20 losses times $500 equals $10,000. Net, negative $2,000. Trader B, 35% win rate. Wins, $1,000 average. Losses, $200 average.
The market can't hurt you. Only your inability to respond appropriately can.
You don't have a dealer's most survives.
Self-trust in trading isn't confidence. It's the absolute certainty you'll follow your rules, regardless of temptation or fear. It's the difference between knowing the path and walking the path. After losing everything, Mark Douglas found that with nothing left to lose, fear evaporated. For the first time, he could see the market clearly. But seeing clearly wasn't enough. He had to trust himself, to act on what he saw, immediately without hesitation. That trust only came through disciplined practice. He started with the simplest rule. I will place my stop-loss order immediately after entry. That's it. Not where to place it, just the act of placing it. He worked on it day by day, resisting the urge to move it, until placing stops became automatic, like putting on a seatbelt. Each promise kept to himself built power. Each temptation resisted forged strength. Not the strength to predict markets, the strength to execute flawlessly, regardless of prediction. Self-trust is built through promises kept to yourself. Every time you follow your rules, especially when you don't want to, you build power. Every time you break them, especially when you rationalize why, you destroy it. Douglas discovered, the market rewards consistency, not perfection. So, what's your next step? Are you still searching for the perfect system? Still blaming the markets? Or are you ready to confront the most challenging opponent in trading, yourself? Mark Douglas's work teaches us that true freedom and consistent profitability in trading come from within. It's not about predicting the next big move. It's about mastering your own mind, accepting uncertainty, and executing your plan with unwavering discipline. If you're serious about your trading journey, grab a copy of The Disciplined Trader. Start journaling your emotions before, during, and after each trade. And remember, when you stop caring about individual outcomes and start caring about process, you've graduated from amateur to professional thinking.